Hello, everyone, and welcome back to Dorman Ventures. Today, I'm joined by Nelson Chu, a venture capitalist with nearly 3 decades of experience, a mentor at Virginia Tech's Apex Center for Entrepreneurs, and a partner at Kinetic Ventures, where he's helped build and back companies across the enterprise software, fintech, and broadband spaces. In this episode, Nelson breaks down one of the most critical concepts in early stage startups, the hair on fire problem, right? We dig into what it really means to solve something urgent versus something merely interesting, and how to pressure test your idea before writing a single line of code, and also what to do if you realize you've been building a solution in search of a problem all along. And we'll explain what that actually means further in this episode. So, if you're a student founder still in the ideation or early validation stage, this episode might just be the most important one in our entire catalog. All right, enough said. Let's dive right in. Hope y'all enjoy. Well, Nelson, thank you so much for hopping on Dorman Ventures. Really excited for this episode. We were just talking about this before the show, but Dorman Ventures, a lot of our episodes, we talk about building our ideas, not about the actual idea itself. So I'm very excited to hop into this topic. Thank you so much for being on.
Well, thank you for having me. Appreciate it. This will be great.
Yeah, I'm very, very excited. Before we hop into things, however, I wanna hear a little bit more about you. Your space in VC, your space within Virginia Tech, and where your career has taken you so far.
Well, I guess back to the beginning. So I grew up in Northern Virginia, went to Robinson High School, and then attended Virginia Tech in the mid 80s, 84 to 88. And, started doing a lot of work with the government, Naval Research Lab in high school, after college. And then my graduate work at MIT was supported by the Army. But realized after working with the government for a better part of 8 years, probably, just decided, it's time to do something more commercial. So at the time, Oracle was doubling in size in both revenues and people, and had done it for 11 straight years. And so I signed up for an interview and was recruited by them out in California to be in a software engineering space. So decided to try that along with 10% of the graduating class at MIT at the time, actually. So there's a lot of folks that went out there. It was a great time to be in California in the late 80s and early 90s. And then after business school back in Boston, decided I wanted to do more general business. So came down to Atlanta to be a management consultant with McKinsey & Company. Did that for a couple of years. And then a buddy of mine that I met during a summer internship years before has started a company at Stanford. So thought about doing that and decided, no, I think I'm gonna go to the consulting route, learn a little bit more business. But that company was Yahoo, so it could have been number 5 at Yahoo. So
Wow.
that was my billion-dollar mistake. But greatly enjoyed my time in strategy consulting. But it was in California that I actually met with and heard of the venture capital industry for the very first time. So this would have been 92. I met with a venture capitalist and was fascinated by the industry and figured I'd just put a bookmark in it and said, hey, I'll get back into it at some point in time. Maybe I'll run a startup or something like that. And I go into the venture space. So when I left McKinsey, I was either going to help run corporate development with Charles Myers and Tom Noonan at Internet Security Systems, or I had this role open up at Kinetic Ventures. They need someone with IT background, which I had. And so joined them, and that was in 1998. So 28 years ago.
Wow.
So it's been a fun ride.
That's amazing. That's amazing. And within that space at Kinetic Ventures, I could only imagine, the amount of startups that flow in and the amount of founders that you've met. And I'm curious, this kind of segueing into what this episode's about, the whole, hair on fire type of problem. Maybe it was before your time at Kinetic, maybe it was after, but at what point in your career did you realize how critical the hair on fire concept really is for a startup?
Yeah, it's an interesting story, actually. I mean, even when I started as a venture capitalist, people talk about, having to do a need to have versus nice to have. And then the other analogy was the vitamin versus painkiller, which I never understood because I take way more vitamins than painkiller. I'm a huge consumer of vitamins. I don't use any painkillers, so that one doesn't work for me. And then in the .com crisis, we took a call from one of our investors, and they're like, "Hey, you guys need to stop operations, et cetera, et cetera." We're like, "Really? We haven't done anything. We haven't actually made an investment in 9 or 10 months. And we've been shepherding our companies, never really got caught up in the whole .com craze, didn't invest in things like pets.com and stuff." And so we thought we were doing a great job. So we called some of our advisory board members, and they're like, "Well, who is it?" So we told them who it was. It was actually, we had at the time a lot of electric gas utility companies as investors. So from 1984 through really 2007, we had electric and gas utility investors investing on the balance sheet. And so the team with whom we spoke with our advisory board said, "Oh, we know what he's got a hair on fire problem. He just filed for bankruptcy. It's a major Fortune 100 utility just filed for bankruptcy. We all know who the name is." And I said, "Oh, hair on fire. I totally get it. I could see him sitting in his office with regulators breathing down his back, and he's really trying to figure out how to get rid of all these non-utility assets." So that's the analogy that stuck with me. And the reason that we and I especially tend to use that a lot is it is really, really hard to change behavior. And I can give dozens of examples where we as entrepreneurs and investors love an idea with, "Oh, this everybody's going to do this." And then when you really go to market, whether it's a consumer product or something that the CIO of Home Depot uses, it's the same challenge. They're doing something now, right? It may be terrible, may not be great, but they're doing something. So their business or their personal lives are running. So it's hard to change that behavior unless they have this notion of his hair on fire, right? And so what we tend to say is really three steps, right? The first step is the entrepreneurs identify a segment of people, population, companies that have hair on fire. That's really the easiest step. The second step is where a lot of people get hung up, which is it's helpful if they realize their hair is on fire. Because if they don't realize it, then yeah, spend time training them. And that's just, as a startup, we don't have resources to train people on why they need to change, right? And we say the third step is even if they know that their hair's on fire, it's helpful if they have the ability to fix it, right? Especially true in the enterprise space. If the CIO of some big company just spent $30 million upgrading their software and they realize that your solution's 10 times better, they're probably not going to go to the CEO and say, "Hey, I just made a $30 million mistake. We should use this cool software from a graduate of Virginia Tech and Blacksburg." And they're like, "No, you're fired. Why'd you do that?" So anyway, it's just trying to impart on people how hard it is to change behavior, and that it's really, really helpful if you can glom onto or help create the sense of urgency that says that, hey, if you continue doing things the way you're doing it, you might get fired yourself, or you realize you're going to get fired, or your spouse is going to divorce you or something, right? In other words, it's so important that you realize you have to make a change, if that makes sense.
100%. Yeah. And one thing you touched on that I saw you mention previously is this idea that, you know, your biggest competitor is the status quo. And, that urgency is the only thing that really comes when we're talking about getting over that inertia of the status quo. Can you go a little bit more into that, what that means and how it
Yeah.
applies to this hair on fire concept?
Well, that's the whole point, is that it's hard to change behavior, right? And so, and what I said earlier is that people are doing something, right? So even though they might be using some old enterprise software, they're able to close their books, right? Or they're able to send the reports to the CFO. It may be slow, maybe it takes an extra 5 people, but unless their boss came in and said, "Hey, we're cutting your staff from 5 to 0, you need to figure out how to get these same reports out in the same amount of time with half a person," that's a hair on fire problem, right? Like, "Okay, well, you're giving me the right to change the software vendor, right? So, well, do what you got to do, but we're cutting your staff." I'll give you an example in the consumer space. So, our latest fund, the Broadband Opportunity Fund, is helping to bring high speed internet to unserved and underserved parts of the country, which is really rural, right? And so, taking advantage of the fact that now, post pandemic, everybody realizes that internet is just as important as electricity and water, right? If we're expecting people to work from home and get education from home and healthcare from home, they have to have high speed internet. And so there's really about $100 billion of federal and state level grants available to bring internet to these unserved parts of the country. So we're working with providers. They're bringing high-speed internet into very rural parts of America, let's just say coal country of West Virginia. And their assumption is they're gonna get to 60% or 70% penetration, with very little marketing and no dollars. I'm like, how's that gonna work? It's like, well, they have really bad DSL service. It's barely 20 megabits a second. So once we bring 1 gig service for $70, everybody's gonna sign up. It's like, no, no. You might get 10% of the people on that street to automatically sign up because they know, right? They've been dying for it. And then maybe another 20% find out that their neighbors are doing okay. But there's a lot of people that are getting by on their daily lives at 20 megabits a second, right? I mean, it's working for them, right? It's just whatever. It may be terrible. You and I would say, oh, that's horrible, but they're going about their daily lives. They're going to work, they're coming home, they're watching TV. So they don't, they may not have a hair on fire problem, right? So that's the point is you can't assume just because you and I know that a gig is amazing and we should definitely buy it for 60 or 70, $80 a month, that someone's going to automatically drop their $20 a month, 20 megabits a second DSL for your high speed internet, right? Because they don't have a hair on fire problem. Now, maybe they get a grandchild that's in DC and not in West Virginia, and they want to FaceTime all the time. Well, that's a hair on fire problem. They're like, oh, I can't FaceTime on my junky 10 or 20 megabits a second. I need high speed internet. That creates a hair on fire problem, right? Or there might be other ways for that particular ISP to create value for the people on the street that are a little reticent to sign up for your high speed internet, right? You've got to demonstrate that it's not a risky problem, or you create ways to say, look, it's a no risk problem. If it's a problem, we'll come in and change it back for you, right? At no cost to you. So it's not embarrassing for your family. It's no risk. So you try to lower the perceived risk in those situations where the hair on fire problem may not be as manifest for some of the users.
Wow, very interesting. And you mentioned how nuanced the idea of whether a problem is actually a hair on fire problem or not, how nuanced that space is. And so, especially for early founders, a lot of our listeners are student founders. They're not directly in the industries that they're introducing, their startup within. And so what would you say are the clear signals these founders can look towards to really, see whether a customer's problem is genuinely, you know, painful and really getting their hair on fire, for the lack of a better word?
Yeah, the approach is vary slightly between a consumer product like internet service or a commercial product like selling some new software system to the chief information officer at a Fortune 500 company. But the telltale signs are similar, right? Meaning you can get people to sign up for the service. They're willing to look at a purchase order and actually sign off on it. So let's just go to enterprise space. Let's say you're able to meet with a corporate purchaser at some department within Virginia Tech, right? Could be a user of your product. Well, invariably, if you ask pretty high level questions, they're all going to say, "Yeah, oh, yeah, that sounds great. That sounds great." Because what's their motivation to say no, right? Why would they tell a budding entrepreneur that their idea isn't any good? That they're not incentivized to do that. In fact, they're highly motivated to tell you, yes, yes, yes. So then the litmus test becomes, okay, here's a purchase order, for $10,000 on a $500,000 product. And then when they step away from the table, then okay, maybe this isn't such a hair on fire problem, right? They're just trying to say a nice thing. So that's the litmus test ultimately, is putting down a purchase order or getting a signed commitment, maybe getting them to use the product, to try it, and to provide true feedback and to get to terms with regards to what would the terms of a contract look like, right? On the consumer space, back to the ISP side, it's one thing if you ship a router and get them to install it. Yeah, that's great. But there's a reasonable percentage of people that will try that and just turn it off, right? And then you gotta go get the product and all that. So it's getting them, when they finally pay for it or prepay for it, then you've reached an audience base that realizes they have a hair on fire problem and they need to change, right? So getting them to prepay even just a little bit, or that's why we like in the ISP space, we like marketing programs where it's not just 2 months free. It might be 2 months free, but you pay for 2 months, right? So you pay for 2 months, you're gonna get 4 months worth. Um, you can turn it off anytime in those 4 months and get the remainder of your money back or some kind of portion, but get them to pay something, right? Put a credit card information into the system. That just indicates a little bit more um, stickiness, if that makes sense, right? So that's on the consumer side. And again, on the enterprise side, it's just getting someone to even sign a pre-purchase order or to go through the process of getting approval from the chief security officer to just try it. And maybe for very little cost, but that required a step of that person to get an approval to try it, which can be a hurdle, right? So if it's not a hair on fire problem, they're just not going to go. They may say, "Oh, Nelson, that's really cool. That's great," and then that if I say, "Well, why don't you try it and we'll put it behind your firewall?" They're like, "Oh, no, 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 no. That's going to take 2 months, and I don't really have time to do that." It's like, okay, well, that's a leading indicator that I haven't identified or haven't really hit on a hair on fire problem, or haven't articulated in a fashion that's hair on fire for you, the potential customer.
Hmm. Definitely. It's funny that you bring that up because my very first year of college, me and a friend of mine, we came up with this what we thought was a killer idea for a fintech product. And so we're going left and right talking to different people in the baking space, and they're all saying they love the idea. We're all getting excited for it. And then finally we speak to a mentor, and he tells us, if you guys are getting a demo out, why don't you, tell them to pay to get on the wait list? And so we're like, yeah, whatever, easy money. We got 100 people that want our product. I kid you not. There were like maybe two people that wanted to sign up for the wait list just because that threshold that we had created, that obstacle, as you mentioned, really allowed people to take a step back and be a little bit introspective and realize, well, this isn't as much of a hair on fire type of problem. Maybe we'll kind of pocket this for now.
And again, just flipping the tables again, what's their incentive to tell you it's a bad idea? I mean, maybe it might end up being a great idea, right? So they're not motivated to tell you, oh, no, or, if they want to, they could say, well, maybe if you push it in this direction or add these features, it'll make it so they could give you some constructive feedback. But until you ask them for a signature or ask them to get on a wait list or even pay a small amount of money to be on a wait list, there's a little incentive for them to be dissuasive of your idea.
Hmm. Yeah, I can imagine. And a lot of those ideas that come out, and after you put some money and a cost behind it, people start stepping away, are often referred to as, solutions in search of a problem. The idea that you have the idea of a solution and you just want to find a problem to fit that space. So a great example is AI. I remember, I was looking at CES and some of the products there, and I'll never forget. They had a salt shaker that utilized AI, and it had a camera in it, and it could see what dish you're making, and immediately turn the shaker to whatever spice is required, and it'll do it all for you. Sounds like a great idea. Apparently, it didn't really perform that well, just because it's a perfect, example for a solution in search of a problem. Just you have AI, and you're saying, okay, where can I put it? And so obviously, you've seen these left and right, within your experience. And for you, what are the clearest signs that a startup is actually a solution in search of a problem, even early on, even if they're, starting out? But what are those telltale signs? And you say, "Oh, this is just a solution in search of a problem."
Yeah, typically, when we meet with teams, a lot of times it's initially with Zoom or something like that these days. If there's mutual respect for each other, they like us and we like them, we'll immediately jump into going on customer calls with them,
I
right?
see.
Based on our relationships. Now, if it's something really highly consumer oriented that we don't really have any expertise, then we just say right up front, like, I'm not sure we're an investor for you because not like we have access to millions of these types of consumers. But if it's something in the enterprise space, we could say, hey, we'll bring you to the chief marketing officer of Chick-fil-A or the CISO for Home Depot. If we believe that they have a hair on fire problem, let's go call on them. Right. So we'll immediately jump into that and start doing some calls with the entrepreneur, with the team to really vet and better understand from the potential buyer how much of a hair on fire. So we like to hear from the customers themselves. ultimately. That's the ultimate vetting, right? And then even before that, if they have some level of traction, they've done some of these ideas we've talked about, right? They say, "Oh no, we were able to meet with the CISOs for Home Depot and Cox Enterprises and Delta and Chick-fil-A, and they all put their name on the list, and they're actually trying." It's like, oh, that's pretty important and pretty helpful and very savvy of you that you're able to get in with these great chief information security officers so early. And clearly, you're probably solving a big problem, a fire problem. If these CISOs of major companies are willing to try your software, even though you're not a billion-dollar Cisco, right? So that in and of itself is a great leading indicator. Now, they may not be high revenues. It's just sort of early on. They're just trying it. They're willing to take a call from an investor, that sort of thing. So those are great leading indicators. And clearly, there's companies that are younger than us, smaller than us. Say, well, we don't have Home Depot yet, but we've worked with a mom and pop hardware store, and they have a similar problem. So great, that's awesome. Is great proxy for how this particular sector or industry thinks about this problem. And so we love it when, and that oftentimes is the case, right, where the savvy team is just as savvy, if not more savvy, on the sales and marketing side than they are on the technology side. Now, they need a technical co-founder in there somewhere, but what we oftentimes see are teams that have such strong technologists. Look, I'm a technologist, right? So did they just want to work on their product forever?
Mm,
And it's like, no, no, you need to just stop. Let's just stop developing and go test it and vet it. Yes, we understand that it's not perfect, but it also is a great leading indicator that the team knows where to prioritize. In other words, there's a list of 25 features, but they know that for their initial sector, for their initial set of customers or segment, that these three really matter.
mhm.
And the other 22 can come later in waves, obviously. But they've decided that they're going to focus on these three. Now, it'll eliminate some of the customers, right? Because some of the customers may want features number 10, 11, and 12. But there's a big enough, early enough segment of customers to say, no, no, features, you get 1 through 3 done, even reasonably well, we're going to sign up, knowing that you're going to develop the other 20. Um, so it's that level of of savviness with the team that's really helpful, and that we can tell that they really are focused on a subsegment of the entire customer base and their particular hair on fire problem that has to be solved now.
Yeah, definitely. And you bring a very, very interesting point. One that I hadn't even considered is this idea of, the most important thing is to just be able to push your product out there and not be stuck in analysis paralysis and customer discovery for so long. So you'd say that it's important to segment, the market that you're trying to address to an extent that once you get that specific focus of companies or customers kind of vetted, that then you move on towards the stage of pushing your product out, correct?
That's right. You continue to add features so that you get deeper within the initial customer segment that you have, but you can also broaden the customers that you're serving, right? Because they wanted other features more than just the first three that you worked on.
Definitely. And I'm curious, how do founders even fall into like the solution and search for a problem in that whole trap in the first place?
Yeah, oftentimes where we've seen teams that are most successful is they came from the industry and they saw a big problem and say, we can fix this. Right. So those tend to get to traction most quickly. Right. Because I'll give you an example of an existing portfolio company, and actually a portfolio company for Lunch Pail Ventures called Instant Financial. Right. So the problem that they're solving for employers, particularly employers in the service industry, like restaurants, for example, is getting employees to even apply to work, especially in this day and age where the alternative of working at a traditional, say, Burger King or Outback Steakhouse, where you might get paid every 2 weeks, is to just sign up for Instacart, where you get paid that day, right? That's number one, getting people to apply. Number two, getting them to even show up for work. Like, okay, why am I getting up for at 8 a.m. for the shift when I could just turn on Instacart and just work when I want, right? And then stop when I work. And then number three, get them to stay longer. So those are three problems that Instant solves by allowing an employer like an Outback to pay their employees a little bit every day they work without changing their whole back office system, without changing their payroll system, which is a complete nightmare. No one's going to change their payroll system, right? So, and the way the team got started is they actually came from kind of the payment space, and one of them had developed a product which allowed an employee, let's say they're working at a factory, let's say an auto manufacturing GM facility or something, and they put in machines so that the employee could go in and actually draw down some of their pay that the day they worked, right? So it was sort of an early example of that. Um, and and the way they vetted it, right? And I think this is what we love about the founding team is they were so savvy. Is they knew a restaurateur, and they got agreement from the owner of that restaurant that yes, this is a problem. They'd love to have this solved. And so before they really wrote any kind of code, they sat in one of the booths of the restaurant, and as employees would finish their shift, they would go by the booth and they ask the employee, "Hey, Zachy, would you like to have $20 a day?" And I say, "Sure." And so one of the team members would run next door to the convenience store and go buy a $20 gift card and come back, and the other one would just put it down on a spreadsheet, say, "Okay, Zachy took $20 today."
Wow, that's a very
They didn't write any code.
right.
And they vet it and say, "Oh my gosh, this is amazing." And then after doing this for several weeks or months, the employees were happier. They showed up for work on time. They stayed longer, and so they said, "Hey, I think we got something here. Let's go ahead and start. Let's form a real company and start writing software."
Wow, that's a very unique take on looking at your customer base. You
Yeah,
know, I've
the other
also
thing that was the other funny part about the story. This is actually a great part of the story. So at the time, the then chief operating officer of the major chain that we all know about had actually called myself and one of my partners and said, "Hey guys, I got a problem for you guys. You guys are always out there trying to solve problems. Right? We built hot schedules, and they were users of hot schedules. Say, let me tell you about this problem." I said, "Sure, tell us about it." And they said, "We have a problem at our service restaurants in that we spend a couple $1 million uh, sending cash to the restaurant." I'm like, why are you sending cash to the restaurant? I said, "Look, in order for these servers to come in, they want to get tipped out every day. And so we have to bring cash into the restaurant because all the transactions are electronic. So we don't have cash to tip out. So if you can solve that problem, that'd be great." I said, "Okay, that's interesting. I hadn't really thought about that problem." And then that's when we got this call from a former entrepreneur of ours. "Hey, I need to introduce you to this team. They figured out a way to pay employees without electronically." We just said, "Hold on, is there collusion going on here? Did you guys team up?" And they said, "No, no, 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 no. We had no idea that this was going to happen. So we had no idea that so and so was going to call you about this." Is that so that that's also great vetting, right? Where a customer is saying, "Hey, can you solve this problem?" And it just so happened that it was a problem that an entrepreneur that we knew was working on. So
That's really, really interesting. And, that's kind of a good side note for all of our student founder listeners. You don't always have to roll out with a fancy and shiny technical demo in order to test out
wow.
whether your idea is worth it. That's really, really
Absolutely. During a lot of the Apex sessions, we meet with entrepreneurs and they want to, raise $200,000 to develop software. I said, "Oh, hold on. First of all, it's 2026. I don't think you need more than more than 1/10 of that to just get ChatGPT to make something for you and but just make something and put it in front of customers and see if they want to use it or not, right? And it doesn't have to be sophisticated. It's sort of vetting the customer need out there, right? And it's really important, right? Because the other thing to think about is some ideas tend to be marketplaces, and the challenge with marketplaces is it's hard enough if I'm selling a piece of software to an enterprise, right? That's really hard. But a marketplace is twice as hard or three times as hard because now you have to build liquidity on the buy side and the sell side. So sometimes with demos or with early, I hate using the word MVP because it's supposed to mean most valuable person, right? Most valuable player. But yeah, with the minimum product, you can try to vet, okay, should I go after the sell side first and build liquidity there and then get the buy side or vice versa, right? So sometimes with a really simple skinny down version of a product or an idea, you can better vet whether you work on the buy side or the sell side in a marketplace.
I see. You know, for some of our listeners who may be listening right now and they have all the alarms going off in their head, realizing like, oh my gosh, my product is just a solution in search of a problem. What do I do? I'm curious, to hear from you, you know, kind of if a founder realizes that, is it always worth to kind of like pivot? Is it kind of expected that they should get it first time, first try? Is it, or are there stages where, if they're too far into it, it's just smarter to just jump ship entirely?
Yeah, oftentimes we counsel folks to try to think more narrowly, right? A lot of times, entrepreneurs really they go too big too quickly, and so our counsel is not scrap it, but hey, what's the small super subsegment of this broader marketplace that we can go after, where with limited resources we can test and validate that there's a hair on fire problem with some small super segment of this customer base, right? So back to your salt shaker example, where I thought that could go would be, people suffering from high blood pressure that don't want to use the medicines and stuff. For some people, it's kind of, if they're trying to cook at home, I mean, it's not super easy to figure out, okay, a teaspoon of salt is actually how many milligrams of true sodium, right? But so that feels like a perfect application for, again, high end people that can afford a $100 salt shaker, but are really, really concerned about their sodium intake. Um, and don't have all the measurements and they just may not know, depending on the type of salt they're using, how much true sodium is in it, right? So again, that's really, really niche, super niche. However, if you've got a really cool idea along this lines that makes it really simple and really easy, you can see how that could be expanded, right, to other people that are concerned about health. And, again, maybe it's got some kind of special um, chemical that can detect certain amounts of sodium, or you can input something else and it detects a different type of food intake. That's one way to sort of get started. And that may still be too niche. And remember, a lot of opportunities really don't require venture capital, right? They might just require friends and family capital to get going. And then, and they may just stay small. And we don't mean to be dismissive, but we call them GLBs, right? Great little businesses. And there's nothing wrong with that. I know lots of people that make a ton of money, taking home $200,000 or $300,000 a year, and they run their business, right? That's not terrible. Not everything is going to be worth $1 billion, right? And so, and it eventually may head that way, but you can think small initially. And also, it's a great learning opportunity for the entrepreneur, right? What's it like to just get a company going and started? Your initial idea may not be the big, huge home run, but you'll learn a lot. And those learnings can be applicable for your next idea or your next idea.
Definitely. I think founders kind of they don't really see the true value in the importance of pivoting. I think a lot of times when they see that their product, their initial idea isn't a home run, they kind of just, like I said, jump ship and don't kind of focus on, let's pivot, as you mentioned, let's narrow down, our target market and try to make sure that we can get as niche as possible. I gotta say, it's impressive that you're able to give, such a great sense of like consulting insight towards the salt shaker company, right off the top of your head. Maybe hopefully they're listening to this podcast episode. They could
Well,
take a
we see we've seen so many ideas over the past 30 years, right? So it's pretty easy to draw analogies pretty quickly. But I mean, it is, look, it's a science, not art, to know when to adjust your idea versus leave it entirely, right? It's totally an art, not now. Look, there's some ideas just obviously aren't going to go anywhere, right? Like I don't know, a different type of fork that costs $100. I'm like, really? I'm not. Who who has $100 fork problem, right? So, unless it's really niche and vanity based, right? And vanity is a problem, right? Solving vanity is a problem, right? Like Facebook and those sorts of things. Those were solving hair on fire problems for a segment of the population, right? So I'm not trying to dismiss the $100 fork, but in general, I'm not sure you're solving any significant problem if the thing costs $100.
I can imagine. I don't know if I would personally buy $100 fork, but maybe there's someone out there. Who knows? But anyways, Nelson, as we close off this discussion, I'm curious. I want to ask some questions on two sides of the spectrum. First off, what is, and this is specifically for founders who are starting out building their idea. What is one question you would tell those founders to ask themselves to really determine whether their idea is truly a hair on fire one?
Well, I guess it goes back to what we discussed earlier, right? Which is after thinking about who the initial target sector or customer is, right? Ideal customer profile is a term often used. Who the initial group is that you want to approach, what the specific problem is that you're going to solve for them, is to go vet it, right? To go find them and talk to them uh, through any way that you can, whether it's relationships or LinkedIn or something, friends of friends, friends of your parents or whomever, to just try to vet it and get real feedback from them. And then ultimately ask them the question is, okay, what would you pay for this and when? Right. Again, that applies whether it's a consumer product or an enterprise product. But the
Definitely.
question would really be, have you actually talked to customers? I guess if I were to boil that down, when we meet with founders, especially really early stage that don't have a lot of customers, have you talked to customers? Right. And if you haven't, then maybe it's time to, and you don't have to have like I said earlier, you don't have to have a fully blown product to go talk to customers, right? Like the Instant team, they didn't have a product. They
Right.
had a
Right.
spreadsheet and someone that could walk next door and buy a gift card.
Amazing. And, you know, looking on the other side that we discussed, if someone listening today realizes, like, wow, I'm months into my idea and now I'm only now realizing that it's really just a solution in search of a problem, what is the very first action that you would recommend them to take right now?
Well, I guess I hate to sound like a broken record, but go talk to customers, right? Take what you have, even though it's not perfect, and go talk to customers, right? Whether that's a consumer product or an enterprise product, just go start talking to customers and and better understand exactly what problem they have. Now, they may have started out talking to customers, which is why they started building it, but it's good to sort of iterate. Say, okay, go back to those with whom you spoke. And you probably spoken, especially if it's just an idea in very general terms, and you started building this thing that had 25 features. And now that you're into it, it might be helpful to better understand from the customers what three features, if you could only have three of these features, what would they be and why? Right. And how much would you pay for it and when? And obviously, you need to do this more than once or twice, right? The best ones do this dozens and dozens and dozens of times over and over and try to build a reasonable experience base. And then the best is if you catch a tiger by the tail and stuff says, "Oh, this is amazing. Can I give you some money now? Get on the list? Or can I get this feature earlier?" In fact, we just had a board meeting this morning, and that was one of the questions that we asked is we're looking at this is a company that's been around for a while, but we're looking at a feature list, right? It's like 120 things that all of our customers have asked for, and these prioritize them, right? A level, B level, C level, right? And I said, so we just said, hey, of the A level deals, right, or A level features that our enterprise customers really, really want, how many of them are willing to pay for it to get it done? It's like that. I'm glad you asked that question because I've started doing that. I started going back to so and so and saying, "Hey, you've asked for this feature, and looks like there's you and maybe one other customer that wants it. It's a little bit low on our priority list, but if you really, really want this, we'll bump it higher in the priority list." And so that's definitely a great way to go about vetting an opportunity and testing it while you're building.
Definitely. That's amazing. And I love how it's kind of a full circle moment here, regardless of where you are. That the answer to everything is just, talk to customers, talk to, you know, your addressable market. That's talk
Yeah,
to
I wish all these great blogs and Y Combinator and all, they always talk about fundraising. Now you scratch your head and say, hold on a sec. You realize that customers and revenues solve all problems, right? Because we affectionately call revenues non-dilutive financing.
yeah.
So the point being is the more revenues you have, the less you need investors like us, right? So it solves all problems. It validates that you're solving a hair on fire problem. It brings in non-dilutive financing, and it reduces your need for financing, which actually increases the interest of investors. By the way, more investors are going to want to invest if you've able to get some traction without raising capital. It's like, wow, okay, so it just solves all problems.
That's fantastic. Well, that's a great point. A final takeaway for all of our listeners. That's
Get
really the key. That's,
revenues.
that's the answer to everything. Just
That's
get
the answer.
revenue.
It is the answer to
Yeah.
everything, quite frankly. It answers all questions, right?
That's amazing. Well, Nelson, thank you so much. And one last question, where can listeners get to, connect with you or learn more about the work you do at Kinetic?
Well, my email is nchu@kineticventures.com. Plus I'm on LinkedIn, Nelson Chu. There actually is it's kind of funny. I think this would have been 19 or 2019, maybe 2018, the height of the crypto boom. Not height, but one of the, I was introduced to a guy in New York City named Nelson Chu. And he runs actually a very, very successful, I don't know what they call it, crypto exchange. Or so sometimes I get his emails and sometimes he gets my email. So there's another Nelson Chu out there in the crypto space, but that's not me.
Okay, that's good for our listeners to know. I mean, feel free to connect with the other one, but
Yeah.
for our listeners, make sure you get the right one.
Yeah.
Of course. Yeah, no, Nelson, thank you so much for being on the show. This was amazing. This is something that a lot of our listeners need. I only now learned recently that, while a lot of our episodes are kind of targeting founders who are kind of, have released their MVP and are working on development, the majority of them are still working on an idea. And so this is a really, really key episode in our entire, episode catalog. So I really appreciate your time. Thank you so much once again.
My pleasure. It was awesome.
Appreciate it. Thank you so much. Have a good one.
Welcome.
All right. So that's a wrap of my conversation with Nelson. And before we close out, per usual, I want to leave you all with a few key takeaways. So, first, urgency is everything, right? As Nelson put it, your biggest competitor is the status quo. People are already doing something, even if it's slow or painful. Unless your situation addresses a problem so pressing that customers feel like their hair is literally on fire, changing their behavior is an uphill battle you likely can't win. Second, don't get it messed up. Polite feedback is not validation. If you're pitching your idea and everyone seems to love it, that means very little. The real test is whether someone is willing to pay, sign a purchase order, or even put a credit card on file for it. That friction separates genuine demand from just simply empty encouragement. And lastly, when in doubt, talk to your customers. I mean, it sounds simple, but it's genuinely the best place to start at really any stage. You don't need a polished product, a pitch deck, or a demo. Nelson's example of the Instant Financial team running their entire test with a spreadsheet and a convenience store gift card really says it all. Real customer insight beats a fancy MVP every time. All right, that's all for this week's episode. I've attached Nelson's LinkedIn and the link to Kinetic Ventures in the show notes below. Thank you all so much for tuning in, and until next time, this is Dorm Room Ventures.